Today we're going to look at the role that inflation played in the US election result. Hello and welcome to Morning Markets. There's a famous quote that it's the economy stupid that determines the outcome of the US election, and this time was no different. However, what was different was it wasn't the labour market but inflation that swung the result. This might seem surprising. The labour market is still quite robust, with unemployment at just over 4%, and inflation has fallen from over 9% in mid-January 2022 to 2.6% on the headline measure today, and core inflation is just over 3%. However, while inflation has fallen close back to the Federal Reserve's target, the price level is still significantly higher than where it was pre-pandemic. For example, food and energy prices are about 30% higher than where they were in January 2020. Because of this, some economists have proposed that central banks should target price level rather than inflation. And that would mean that central banks have to correct for previous overshoots in inflation. In addition, wages have failed to keep up with headline prices, so that has meant that households have felt poorer in real terms. On top of this, low interest rates have led to financial engineering, which has boosted profits of companies at the expense of wages. This has led to a rise in income inequality, with higher income households benefiting from higher dividends, but lower income households suffering as a result of that downward pressure on wages. And this in turn has led to an increase in populism and maybe helps explain the US election result just a couple of weeks ago. The election outcome, with Republicans gaining complete control of Congress, means that fiscal expansion, including a likely cut in the corporate tax rate from 21% to 15%, is probable. This, along with tariffs imposed on imported goods, is seen as inflationary, and as a result, investors have scaled back their expectations for interest rate cuts. The era of low interest rates and tight fiscal policy seems to be coming to an end, and globally we seem to be seeing a shift away from low interest rates and tight fiscal policy to the opposite, so higher interest rates and expansive fiscal policy. Taking all this into account, could we be seeing a turning point in central bank inflation targeting? Thank you for listening.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.